Hello, everybody. Welcome. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are flat today. Generally, Nasdaq is up 0.9% on the back of Microsoft and Meta and Amazon. S&P 500 is up 0.5%. Russell 2000 small caps are slightly down. Crude oil is at 69. We're going to take a deeper look at that. Treasury yield curve is down a few basis points after today's tremendous amount of data. Personal income and spending came in generally as expected for June. Personal spending came in slightly lower than expected. PCE prices for June was a notch higher than expected, especially on the core front, 0.3, as we've been talking and predicting on this live stream. Initial claims are still pretty low, 218,000 versus the expected 220,000. Continuing claims also ticked down for mid-July to 1.9 million. Employment cost index, however, on Q2 was higher than expected at 0.9%. Chicago PMI came in higher than expected, but still below 50 for July. Let's take a closer look at the heat map. Microsoft is up 0.5%. Meta is up 12.4%. Amazon is up 2%. Tesla is down 2%. Everything else is mixed. Oil prices, as I mentioned earlier, has been trending up, now at $69 per barrel. Let's take a closer look at oil prices because they're very important for inflation figures. Oil hits pause as traders parse Trump's Russia threats. U.S. data. Oil on track for a third monthly gain. As you can see on your screens, oil on track for a third monthly gain. Crackdown on supply from Russia, Iran has helped boost prices. Let's read our daily article. Wall Street cools after Microsoft's $4 trillion moment. Tech results awaited. The S&P 500 and Nasdaq receded from record highs notched earlier on Thursday as Wall Street shifted its focus beyond Microsoft's $4 trillion milestone and braced for Apple and Amazon's earnings later in the day. Microsoft jumped 5% after blowout earnings report and briefly crossed $4 trillion market cap, becoming only the second publicly traded company to ever touch the milestone after NVIDIA. Meta Platforms rose 12% to a record high as AI-driven growth in its core ad business powered a bullish revenue forecast, while NVIDIA also climbed more than 1%. The earnings that we got from them fell very much in line with what we were expecting, said Mark Malek, Chief Investment Officer of Siebert Financial. The tech rallies sent the S&P Technology and Communication Services indices to new record peaks. The Nasdaq Composite jumped as much as 1.2% in its strongest intraday rally in nearly a month, before pairing gains to 0.8%, while the S&P 500 advanced 0.45%. Inflation remains sticky and justifies the Fed decision to keep interest rates unchanged, said Clark Bellin, President and Chief Investment Officer at Bellwether Wealth. Attention now turns to Friday's non-farm payrolls report and a looming tariff deadline, with President Trump refusing to extend trade talks for lagging partners. Separately, weekly jobless claims increased marginally last week, suggesting the labor market remained stable. Easing global trade war fears, signs of U.S. economic resilience, and renewed AI optimism have set Wall Street on course for monthly gains. Let's take a deeper look at Trump. Trump talks with Canada, India, and Brazil in stalemate as his tariff deadline looms. President Trump's tariff agenda is nearing a moment of truth, with the August 1 deadline just hours away and set to establish a new baseline rate of 15% on most of the world. Many final moves have come in a flurry, from a deal with South Korea to a delay with Mexico, but three key nations across the three continents, Canada, India, and Brazil, have seen their talks go sideways for vastly different reasons. Importers there have now likely to face higher rates, at least for the time being, leaving relationships with the world's largest recipient of U.S. goods, Canada, and the world's fourth largest economy, India, and the Western Hemisphere's second most populous nation, Brazil, all in flux. The lack of progress with these countries comes ahead of the Friday deadline that Trump and his aides are saying again and again is unmovable. Trump recently called it a big day for America, Aides also say that negotiations will continue past August 1. The fate of the US China trading relationship is another uncertainty, but negotiators appear to be close to at least another 90-day pause on tariff hikes. Treasury Secretary Bessent told CNBC Thursday he would speak to the president Thursday about an extension, with additional technical details still to be worked out, but the markings of a deal in place. The administration also faces a legal hurdle as its Friday deadline approaches. A federal appeals court will hear arguments Thursday on the legality of the authority Trump is claiming to impose these tariffs. A focus on Canada with limited economic effects for now. Trump reiterated the lack of progress with Canada Thursday morning in a Truth Social post where he brought the Middle East into the mix. Wow, Canada has just announced that it is backing the statehood for Palestine, he wrote. That will make it very hard for us to make a trade deal with them. The post came in response to the news that Canada will join France and the United Kingdom in this largely symbolic move that the Trump previously brushed off. It's the latest Trump missive and continues a string of critical comments about America's northern neighbor stretching back to the beginning of Trump's second administration. Trump is promising to move forward with a 35% tariffs there, which would be a major setback in relations between the two countries, but one with more limited economic effects for now. Next, chaotic tariff rollout has U.S. importers' customs agents in limbo. President Trump entered office in June, pledging to unleash prosperity by raising tariffs and cutting red tape. 6 months later, the back office systems connecting the US and global economies face their toughest test yet again on an onslaught of both. So, like I said before, I think these tariff negotiations will take several quarters before we get the final numbers. And the adjustment, even on the kind of practical application side of things, the adjustments on customs will take a little bit too. It's going to be 2 steps forward, 1 step back. We're not going to see it in the inflation reports for months to come. But let's continue with this article for a little bit more. Importers, customs brokers, and the broader logistics industry are bracing for a deluge of fine print on tariffs before Friday, when Trump has pledged higher country-specific duties amid a number of import tax targeted at certain products and materials. Hours before the deadline, key deadlines needed to keep goods flowing, and the paper trail compliant are unclear. What will dozens of still unspecified levies be? Will they apply to merchandise already in transit? And how and when will some of Trump's recent deals be implemented? If there's no formal notification before August 1, does that mean the current rates are being assessed? The April 2 tariff rates? We don't know, said Cindy Allens, Chief Executive Officer of Trade Force Multiplier LLC, an international trade and customs consulting firm. U.S. Customs and Border Protection, the federal agency that enforces tariffs and the nation's trade laws, can't implement anything based on Trump's letters, Truth Social posts, or administration fact sheets that have outlined his negotiated deals and unilateral pronouncements. CBP needs a more formal notice, such as an executive order or proclamation. That's paralyzing companies and their customs brokers who face mounting electronic paperwork using software that hadn't been updated as of early Thursday. After months of trying to keep up with quick changing rules, the importers of record that actually pay tariffs, not U.S. trading partners, as Trump often claims, worry about penalties and surprise bills that can run into the millions of dollars. For many, it's impossible to know where and when to send their next purchase orders, much less plan capital investments. In addition to making custom declarations, brokers now are really in the weeds with advising clients in how to comply with the regulations and changing tariffs, but also looking at strategies on how to reduce the tariffs, mitigate the tariffs, delay the tariffs, said William Jansen, head of customs brokerage at Seco Logistics. It's around the clock. Yeah. Yet another reason why tariffs are just not a good idea, in my opinion. But more on Trump. Trump's EPA is targeting key vehicle pollution rules, what that means for car makers. So this has massive implications for companies like Ford and Tesla. EPA protection agencies plan this week to relax rules aimed at cleaning up auto tailpipe emissions is the latest Trump administration move to undo incentives for automakers to go electric. As part of a larger effort to undo climate-based government regulations, the EPA on Tuesday said it wants to revoke the 2009 finding that carbon dioxide and other greenhouse gases endanger public health and welfare. That would cripple the legal basis for limiting emissions from things like power plants and motor vehicles. President Trump's massive tax on spending law already targets EV incentives, including the imminent removal of a credit that saves buyers up to $7,500 on a new electric car and $4,000 on a used electric car. The tax law approved in early July also includes another provision that will hit Tesla and other EV makers in their pocketbook, repealing fines for automakers that don't meet federal fuel economy standards. Automakers can buy credits under a trading program if they don't meet the mileage standards. EV makers like Tesla, which don't rely on gasoline, earn credits that they can sell to other automakers. The arrangement has resulted in billions of dollars in revenue for Tesla and millions for other EV makers like Rivian. That is all set to go away under the new law. Trump has also challenged federal EV charging infrastructure money and blocked California's ban of new gas-powered vehicle sales. It adds up to less pressure on automakers to continue evolving their production away from gas burning vehicles. And that's significant because transportation, which also includes ships, trains, and planes, is the sector that contributes the most to planet warming emissions in the US. Stringent tailpipe emissions and mileage rules were part of Biden administration's pledge to clean up the nation's vehicles and reduce use of fossil fuels by incentivizing growth in EVs. EVs do not use gasoline or emit greenhouse gases. The Trump administration and the auto industry have said both rules were unreasonable for manufacturers. Automakers could meet EPA tailpipe limits with up to 56% of new vehicle sales being electric by 2032. They're currently at about 8%, along with at least 13% plug-in hybrids or other partial electric cars. The latest mileage targets set under Biden administration required automakers to get an average of 50 miles per gallon. I think this is a very underappreciated change. I think it's going to hit Tesla's bottom line by billions of dollars per year. And Tesla doesn't have much margin right now. Let's move on to Carvana. Carvana stock soars on record quarterly sales as tariffs help lift demand for used cars. Carvana stock soared 16% on Thursday, putting shares on pace to close their first record. Hold on for 1 second. Sorry about that. Putting shares on pace to close at their first record since 2021 after the online used car seller posted a blowout quarter with record sales and profits per unit sold. The company said it sold more than 143,000 vehicles in its second quarter, up 41% from the same period a year earlier. Revenue climbed by more than 40% to $4.824 billion. Tariff announcements. That higher April retail GPU can be really linked to the announcements of auto tariffs in late March that drove stronger demand and higher margins, Carvana's CFO said during the company's earnings call on Wednesday. Carvana said it's on track to reach its long-term goal of selling 3 million cars annually within 5 to 10 years. During the company's earnings call, management noted Carvana has room to grow as it currently holds just 1.5% of the U.S. used car market. Its retail sales have grown roughly 80% over the past 2 years. Our machine is getting simpler. We're adding additional locations to hold inventory and recondition inventory. We're making it so there's less work per transaction. And I think all of that aids growth, CEO said. On Thursday, BofA analysts reiterated their buy rating on the stock with a price target of $425, noting the convenience of purchasing online would only grow as consumers shift more towards used cars. We think CVNA is also benefiting from a mix shift towards used as cost-conscious customers seek value, wrote BofA research analyst Michael McGovern. The Tempe, Arizona-based company has become a poster child for one of the most dramatic turnaround stories in recent years, burning short sellers who bet against its stock along the way. Shares at Carvana are up roughly 8,000% from their all-time lows below $4 in December 2022, when the retailer was facing bankruptcy speculation. Last year, the company posted its first ever annual profit, with CEO and chairman Ernie Garcia telling analysts, It's very hard for a group to go through a period like the last 2 years and not disintegrate under pressure. We didn't disintegrate. I mean, one thing that this article is missing out on is Carvana's exposure to subprime borrowers, but maybe we'll discuss that some other time. Let's go to Ferrari. Ferrari shares slump 12% in biggest drop since 2016 listing. Ferrari shares fell more than 12% on Thursday, setting the stock for its biggest one-day drop since its listing 9 years ago, even as the luxury sports car maker maintained its guidance, although it said it would cut back prices in the US. Citi analysts said that although Ferrari continued to deliver solid results, the focus had now shifted to whether the Milan and New York listed group can sustain its high profitability amid slowing growth in sales volumes and pricing. The focus now shifts to how far the EBIT margin can go in H2, with shipments and average selling prices slowing. Interesting. I mean, Ferrari is obviously a luxury brand. There's some weakness in luxury brands across the board. Let's move on to Apple. That's going to announce after hours today, in a couple of hours. Apple Q3 earnings to give Wall Street better view of tariff impact, AI top of mind. Apple is scheduled to announce its third quarter earnings after the bell on Thursday, as Wall Street looks for signs of movement on the company's AI plans and a view into how much tariff-related costs are eating into its margins. Apple could also face additional levies if President Trump moves forward with his threat to impose 25% tariff on iPhones unless Apple brings product producing them in the US. That's not going to happen. At the same time, Apple is dealing with concerns about the impact of Google's antitrust lawsuit on the company's $20 billion per year agreement to use Google Search as the default search option in the Safari browser and Siri. But there are positives on the horizon as Apple gears up for its annual September iPhone launch event. It's expected to debut a redesigned, slimmer iPhone that could boost the company's phone sales in Q4 and the year ahead. For the third quarter, Apple is expected to report earnings per share of $1.43 on revenue of $89.22 billion, according to Bloomberg consensus estimates. The company saw EPS of $1.40 and revenue of $85.7 billion in the same quarter last year. So that's interesting. That's a big increase in revenue. BofA global research analyst Wamsi Mohan wrote in a research note Monday that investors will likely focus on Apple's tariff costs and their impact on Q3 and Q4 gross margins. While margins could face pressure in the near term, a thinner iPhone could help drive margins higher thanks to an anticipated higher starting price. Apple is expected to post Q3 iPhone revenue of $39.8 billion, up from $39.2 billion in 2024. Services revenue should come in at $26.8 billion, an improvement from the $24.2 billion Apple posted last year. I mean, I think people really wrote this company off, but there are some services that Apple provides that I couldn't do without. I mean, I can't do without my AirPods, for example. I can't do without Apple Pay and a few other services. So Apple services revenue could soon come under pressure, though. The federal judge overseeing Google's search antitrust case is expected to rule on the remedies phase of the trial, which will spell out what the company has to do to correct its monopolistic behavior. That could include ending exclusivity deals like the one it has with Apple. Unfortunately, for the iPhone maker, that $20 billion agreement makes up a large chunk of the company's services revenue. Losing it could spook investors. Apple is also facing continuing criticism for its slow AI rollout. Wedbush analyst Dan Ives has called the companies to purchase AI startup Perplexity. I'm not even going to read that code. All right. One more company-specific news, and then we're going to talk about mortgage market. Qualcomm slides after posting lackluster phone chip sales. Shares of Qualcomm, biggest maker of chips that run smartphones, fell after the company reported lackluster growth in that market, fueling concerns that tariffs will take a toll on the industry. Phone-related sales rose 7% to $6.33 billion in the fiscal third quarter, which ended June 29. Qualcomm said Wednesday in a statement. The average analyst estimate was $6.48 billion, according to data compiled by Bloomberg. The results add to broader fears that a chip growth resurgence is under threat. In recent days, semiconductor makers such as Texas Instruments and Intel gave cautious outlooks, triggering concern that the sales rebound will be short-lived. Qualcomm shares fell as much as 6.2% Thursday in New York, their biggest intraday decline in 3 months. Heading into the earnings report, the chip maker's stock had already lagged a general rally by semiconductor stocks this year. Let's move on to the mortgage market. Mortgage rates averaged 6.72% following Fed's continued rate pause. Mortgage rates have stayed in a narrow elevated range since spring, keeping the traditional busy home buying season relatively sedate. Mortgage rates dipped this week after the Federal Reserve held benchmark interest rates steady for the fifth time this year. Average rate on 30-year fixed mortgage was 6.72%. Previous week's average was 6.74%. Meanwhile, the average 15-year, who cares about 15-year mortgages? All right. On that note, thank you very much, everybody. And I will chat with you all next time. Take care.